Welcome everyone and committee members to the Citizen Investment Oversight Committee quarterly meeting. We're happy to see you here today. I am the City Treasurer Victor Roy, and today is Tuesday, November 10th, 2020, and I now open the CIOC meeting with roll call. Member Gallagher. Present. Member Hanson. Here. Member Pickrell. Here. Member Todd. Here. Member Wanamaker.
Here.
All are here. We do have a quorum. First note is that our member Ed Ayer has announced his resignation in October due to ill health. On behalf of this committee and its members, I would like to thank Mr. Ayer for his years of dedicated service with our Citizen Investment Oversight Committee. Mr. Ayer, we all wish you all the best. Also attending our meeting today is our city's Financial Services Director, Jane McPherson, and our Treasury Manager, Steve Hodges, and then also our Treasury Technician is Becky Salvatierra. One last note is today is November 10th, and in 1775, as Oceanside City Treasurer and on behalf of our Citizen Investment Oversight Committee, I proudly join our nation in wishing the United States Marine Corps a happy 245th birthday, officially established by the Second Continental Congress on November 10th, 1775. The Marine Corps has protected our sovereignty in the air, on land, and at sea. Camp Pendleton, our proud neighbor, happy birthday. All right, we now move to our first agenda item, the review and approval of minutes for the meeting of August 11, 2020. Has everyone reviewed the minutes? And are there any questions? Seeing none, I call for a motion to approve.
I'll motion to approve.
All right. Member Todd has a motion to approve. Do I have a second? Second. Second by Gallagher. All in favor say aye.
Aye.
Seeing no opposed, the motion passes 5-0. Thank you. Now we move to item number 2, which is the portfolio review and current portfolio holdings as of November 3rd, 2020. I call upon our Treasury Manager, Steve Hodges, to please bring us up to date.
And I'd like to start off pending a recount. Looks like we're going to have Victor for another 4 years, so congratulations.
Thank you.
Okay, so going over our current portfolio, just like to point out, LAIF, the first item on there, we're down to 0.59%. That's the latest rate. The good news is rates bounced a bit yesterday. I'll read you a little excerpt of the theory behind that and whether we think they'll stay there or not. But 0.59%, believe it or not, is actually still, one of the highest investment rates we can get currently. As far as callables are concerned, we are finally winding down on callables that are going to come out of our portfolio. We have $6.5 million coming out in November. We have another $8 million coming out in December. And then all of 2021, we only have $8 million. So we should start seeing that stabilize. And that rate is down to 1.43 and will continue to drop. But for all intents and purposes, everything else that you see, those line items are what we refer to as bullets. And I'll reference that in another couple pages as to why that's important and it's where we're trying to go. So I think I said rates bounced a little bit. The 10-year is almost at 1%, which is fantastic. It hasn't been there since March. So the recommendation today from some of our brokers was today is a good day to buy because we did get that bounce in rates, and it's not expected to necessarily stay or go up. But how competitive it is out there, I put in a $2 million bid this morning and only was awarded $300,000. So still people are willing to park their money, 4 or 5 years out for less than 1%. So, but we're trying. And I just want to read a little excerpt from one of our brokers that we got this morning, his commentary on the market and why it did what it did and what he believes it's going to do going forward based on the projected election results. I find it very interesting, but basically what he said is it looks like the Dems are going to lose 10 seats in the House, but the Senate is going to stay with the Republicans. So from an investor standpoint, there's probably not going to be a green energy deal, and there's probably not going to be huge regulations, meaning tax hikes on corporate profits, capital gains, dividends, and taxes on the wealthy probably won't take place because of the House divide. So the theory is that's why we saw the bounce in the markets, because the uncertainty, we're not going to have the major sell-off in equities because people want to take their capital gains. And so the most powerful person in his opinion is actually Mitch McConnell right now, because the Senate's going to have the power to push those things through, and it's divided with the House. And therefore, that's why we're seeing the stock market go up. We saw a little bit of increase in the rates, but that's probably not going to go much higher than that. But I thought that was interesting. It came out this morning. So going into what treasuries are at, we did get, like I said, 0.97 today is what the 10-year went to. But as you guys all know, we can only go out 5 years. So when we're looking and comparing on what we're buying, the 5-year treasury is still at 0.46. So when you saw LAIF earlier at 0.59, 13 basis points is pretty significant in this market. As you know, the vaccine is a big, it's the silver bullet we need to get the economy back on track. I don't know if you guys read, but Pfizer came out with a vaccine that looks like it's going to be 90% effective. But they're saying it's not going to be widely available until spring of 2021. And if you put that in perspective, that's a long time from now. So whether that's accurate or not, it could be rolled out in a small percentage at the beginning of this upcoming year. But to the masses, we're still looking at spring of 2021. And again, that's just on the economic data that we get from the Bloomberg and the experts each day. We're expecting to see 200,000 cases a day, which is almost double what we're seeing now. So they're expecting a dark winter and probably more lockdowns, which isn't good for our economy, as we all know. And that's all I have on the current status of our investment portfolio, unless anybody has any questions.
We haven't made an investment in CDs in
I'm sorry, this is Mr. Hansen. Go ahead.
We haven't made an investment in CDs in roughly a year. Is it credit quality, yield, or something else?
There's several factors in that. Right now, 5-year CD, and I didn't pull the rates today, but it's like 0.3. So it's a very, very low rate. We're getting, a better return or an equal return just leaving our money in our normal banking account, which I'll talk about a little bit later. We refer to it as ECR, but that has greater liquidity. And so as far as opportunity loss, very hesitant to lock our money up for 5 years. When I quoted that 0.3, that's going out 4 or 5 years. It may, because rates bounced yesterday up a little bit, they may have increased a bit. But it's not competitive at all. When we evaluate our investments every day, I pull up the chart of this is what corporates are paying, this is what muni bonds are paying, and currently CDs are nowhere competitive to the other investment options that we have, and plus it would lock our money up long term, so there would be an opportunity cost if rates do increase like they did today.
Okay, thank you.
Are there any other questions regarding our current status? All right, seeing none, we will move on to item number 3, which is a review of the City Treasurer's report for the month and quarter ended September 30th, 2020. And I call upon our Treasury Manager, Mr. Hodges, to give those reports.
So despite the low rates in the environment, this is actually a really good report and have some great things to share on this that each of us should be very proud of. We've all spent the last 9 months to a year discussing strategy on what we should do with our portfolio and where to go with it. And that strategy is paid off. So I polled 8 cities around and what their performance has been this last year as far as what the average yield is. And going back a year, we were 7 out of 8. And when I say 8 cities, not every city is posting their investment reports online currently, potentially because of COVID and not holding their meetings. And some don't report their numbers apples to apples as we do. For instance, one of the nearby cities doesn't include LAIF in their portfolio numbers. Well, if we didn't include LAIF in ours, our numbers would be a lot different as well. So it kind of skews things. So I took the ones that we can compare apples to apples. And so going back a year, we were, 7 of 8. And fast forward to today, we're now number 2 of 8. And we picked up 16 basis points on the average. And why that's significant is 16 basis points equals $600,000 extra a year in investment earnings on a $375 million portfolio, which is about where we're at. And that $600,000 actually covers our treasury budget for 2 full years. And that's just the basis points that we've picked up over that year time versus our nearby cities. So that's a credit to each one of you, your input and the strategies that we've done going forward after each quarterly meeting and put into place. So we should be very proud of ourselves. And thank you all for your input as always. And again, we'll collect that input and get a strategy going forward from here.
And with that, are there any questions?
Oh, no, hold on. I want to go through the very next page. There's a graph.
Go ahead.
So there's a graph here that shows the cities that were compared against. And if you guys remember, I think it was about a year ago, 9 months ago, we discussed the danger of having a high percentage of callables in our portfolio versus having bullets. And when we looked at our portfolio a little bit ago, our portfolio is now mostly bullets. If you look at the green line on this chart, it's the city that is ahead of us in the 8th ranking. And their portfolio has stayed pretty steady through that entire time. And what that indicates is they had that bullet-driven, laddered portfolio and didn't have a portfolio full of callables like it appears the rest of us did. And remember when we reviewed the data about a year ago or maybe 9 months ago, overall in the long term, it showed that the bullets were going to outperform. And so if you look at that green line, it looks like they did exactly what we did in March, where we took advantage of the panic selling, and we picked up, a lot of investments that were paying 1.5%, 2%, which sounds low, but it's really high compared to the 0.5s we're getting today. So they stayed with a very balanced portfolio, appears to be all bullets, and then they took advantage of the dip in the market, and their yield actually went up. So they outperformed us, and they did everything that we're trying to do, and we'll get there once we have, our callables falling off, and obviously we need some things to go our way in the market. But that's the perfect example. They did everything that we're trying to get to. But other than that, as you can see, we did really well. We're two. So again, be proud of that. And then if you flip to the very next page, it shows you the data by quarter in numbers, and it shows you where we were in September to where we are now. And obviously, or where we were in June. I did it for fiscal year, because today we're just going over the September numbers. So even though the percentage went down, it went down for everybody. But we've picked up, we've gone from being 11 basis points below the average to 5 basis points above average. And then the next page, I want to just go over, just point out one thing real quick is our average days to maturity is sitting at 1.5 years right now. And that's exactly where we discussed we wanted to be last time. Well, we'll get to the graphs in a second, but we didn't want to have too much out 4 or 5 years just because the yields are so low, and there is going to be an opportunity cost if rates go up, and very little to gain if they do not. So, and let's see here. All right, and then I'm going to flip all the way to page 24, which is just the 4 graphs. And on page 24, as you guys are all used to seeing, for me, the most significant two are the bottom two. It's the aging with the call dates factored in. And so as we just talked about, we have very little parked out in the 3 to 4 and the 4 to 5 year range. And that's just based on projections of, people that are much smarter than me, that rates will go up after the 3-year mark. And so we want to have flexibility when that does happen to take advantage of it. And, hopefully then start laddering our portfolio going forward. And then graph number 4, where we mark against our performance measures. So for the 3rd quarter in a row, we've exceeded our benchmarks. And this graph actually takes out LAIF and tells us what our portfolio is doing without LAIF. And that is doing pretty darn well, pretty flat, pretty straight. If you just flip over the page and it has the bar charts, I just wanted to point out one thing, and it's in regard to a change that we had made in our investment policy last meeting. So it would appear on what is referred to here as medium-term notes, which is basically our corporations. It would indicate that we have more than the 15% allotment that we're allowed to have in our portfolio. But if you recall, we changed the language to say 15% at the time of purchase. And so the reason why we exceed that now is because we have about $20 million that we're keeping in our daily bank account. And that was when I referred earlier to what was called ECR, which is just an earnings credit that offsets our fees. So we get 0.25% on that, which doesn't seem like a lot, but compared to anything out there in the 1 to 3 year range, there's nothing competitive to it. And so it's secure and it has flexibility, and we're better off putting it there at that return than anything else in the short term. So I didn't want to alarm you when you saw that it appeared that we're over our percentage, because we did make that change in our investment policy, that it's 15% at the time of purchase. And that's all I have on item number 3, unless anybody has any questions.
Not so much a question, just a very positive comment that.
All right, this is Member Gallagher.
Yes. Several quarters ago, the prediction was very dire, and I'm glad to see that you guys did such a wonderful job of just kind of sticking to a plan, in taking our inputs to you, and I would have never thought that we would be as good as we are now, presently looking at from 3 quarters ago. So thank you.
Are there any other questions? Okay, seeing none, we'll move to item number 4, which is a review and proposed approval of the staff reports for the month and quarter ended September 30th, 2020.
And so this is, again, the standard report that you guys are all used to seeing, but just some of the key things that I want to point out. On page 2, we've referred to it now a couple of times. It refers to the $20 million that we have in our bank account for the ECR. And that's why you see in June we had $392 million in our portfolio, and it's down to $368. And the only reason why is because we put $20 million in our daily bank account, and then we invested another $6 million in our 115 trust. And our 115 trust is a way for us to essentially fund our pension liability outside of our investment portfolio. And we did really well on that last year. We got a 5.8% return. So you compare 5.8% versus the 1.7, that was a fantastic investment. We have over $17 million sitting in that trust right now. So it may appear on paper that our cash has gone down in the last quarter, but that's actually not the case. So kind of what was hinted about earlier, how a year ago we thought we were going to be in dire straits. We're not seeing the cash drain yet that we may have thought we would have. And then I'm going to flip all the way over to page 5. And I just want to talk a little bit about the fees. They're a little bit misleading. Our fees are down $46,000. They're really down about the $26,000 that you see in merchant fees. And that's what we had discussed the last meeting, where we got a break from Visa on what they were charging us on interchange fees that went into effect in January 2020. So we'll keep seeing a decrease year over year in merchant fees until we hit, I guess, January 2021 going forward, and then it will probably level out a bit. The reason why you see a savings in Armored Carrier, the first part is that we haven't had much of many of our facilities open because of COVID, so there hasn't been as many pickups. And the second part of it is and I kind of feel for them, if you think about their business, it's, going to a lot of restaurants and doing a lot of pickups. So it appears that they're very short-staffed or having a hard time. So we're not getting the billings accurately that we normally would have been to have a cost there. So we technically do still owe them money for the last quarter based on the 3 or 4 facilities that we've had open. There's just been the billing issues based on the COVID problems. So that's not really a $14,000 decrease. That's just a reflection of the environment that we're in. And that is all I have on that item, unless anybody has any questions.
All right, seeing no questions, I call for a motion to approve the staff reports.
Motion made. Approve the staff reports.
I have a motion by Gallagher. Second. All right, a second by Pickrell. All in favor, say aye.
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 And seeing none opposed, the motion passes. Thank you. 5-0. Let's see. Next is item 5, which is the public input and items that are not on the agenda. However, we have not received anyone from the public that wished to speak at today's meeting, nor have there been any public submissions. So now we'll move on to item 6, which is the conclusion of our business for today. As the city treasurer, I thank all of our committee members for their time and dedication to this very important work done as citizens of Oceanside. Again, thank you everyone for attending. The Citizen Investment Oversight Committee will reconvene at its next regularly scheduled meeting on Tuesday, February 9th, 2021 at 2 p.m. here in the City Council chamber. So at this time, I adjourn the meeting.